Now we come to the last conference session of the day. We are very honored to have a keynote delivered by Mr. Drew Bernstein, co-chairman Marcum, Bernstein, and Pinchuk on the topic of IPO success factors for tech companies from Greater China. Drew?
Hello, everybody. First, I'd like to thank Cyberport for inviting me to speak at the conference today. And it's truly an honor to be in front of most of the guiding lights right now of the VC world. VC has always been a very important part in the IPO world because it's the principal source for growth capital. I'll tell you a little bit about myself. I've been in the international accounting world for the last almost 40 years. I spent my first 15 or 16 years working in Europe, and I've spent the last almost 22 years now working in China. What I haven't learned in the last 22 years in China, my wife is Chinese from Beijing, so I learned from her. So I'm not the typical Lawai. I'd like to get into a little bit about the public markets today. If we can skip to the next slide. The golden age for IPOs. It's also the golden age of unicorns. We're in a different world today. When the term unicorn was first termed in 2013, there was 39 of them. And today there's almost 600 of them, of which 80% are US and Chinese, and almost half of that is Chinese. There's almost 260 Chinese unicorns today. And that's what everybody's chasing. For VCs, the interesting part of this is that these companies have greater choices than ever today. Because 10 years ago, the only kind of markets that they really had were the US markets, possibly AIM, Toronto. But now there's several markets, and Hong Kong and China right now, that are very viable markets for these companies to go public. Next slide. This is a really interesting slide and graph. I think it's pretty important. As you can see, despite the trade tensions, the IPO markets right now remain brisk. Had you asked this, had we been talking prior COVID, the question was, were the trade tensions going to deter Chinese companies from going public? And today the question is not, is it going to deter, but where are they going to go public? Because they have so many choices today. If you look at this analysis, one of the things that we found, if you invested in Chinese IPOs this year, really, you had a return of almost 21%. But when we kind of stratified and bracketed out those companies that were raising over 100 million, the returns went up to 67% above US returns. So there's a lot of interesting Chinese companies, especially today, to invest in. Next slide. The Chinese equities face greater risks. You've seen all this. There's been a lot in the news right now. And I think the driver behind all this is really good fundamentals of companies and using good accounting. That's the driver behind all this. And one of the things that when I talk to public companies, I tell them all the time that if you want to be a successful public company, no matter what market you're going on to, you need to own 80% of the investors' trust and confidence. That's really key to a successful company, regardless of what market you're going on. The Chinese account right now in the US for almost $2 trillion worth of market value. So if delisting were to ever happen or they close the door, it would be devastating on the US markets. My take on this right now is that there are equitable solutions for both sides and that they can come together. And I've always said that I think if you took the Chinese regulators and the US regulators and put them in a room together where they were secure and nobody was listening, they would probably agree on quite a lot. a lot more than you would think. So, I would hope that things going to improve soon. If we can go on to the next slide. The US markets, they continue to offer, in my opinion, probably the gold standard, at least up to this point. And the reason for that is because each of these markets have different characteristics. And some of the characteristics of the US market, which are happening now in China because the Chinese markets are maturing right now. And they're moving now to a more disclosure-based system. And I think that what the US markets offer to people right now are really very deep, diversified sources of capital. They offer also the ability to do these add-on rounds. You've had billions of dollars raised this year by companies that went public last year. And also the specialized analyst sphere, which we don't normally see around for especially some of these micro industries. So up until this point, I think the US has been the gold standard, but now you have companies like Ant Financial going, and they're going to prove the depth of the Hong Kong market right now, because raising that kind of money, and Shanghai too. So, and up to this point right now, we've seen Shanghai, at least for the first 3 quarters of the year, have been #1, and Hong Kong's been #3. So all of the markets right now are doing well, despite these kind of trade tensions. And it looks like Hong Kong is being used as a strategy right now as security against the US markets. It's like an insurance policy, because when you're going to do a dual listing like that, especially combining Hong Kong and Shanghai, that's going to give these companies that dollar convertible currency that they're looking for at this point. Because raising, say, $100 million of renminbi is not the same thing as raising $100 million or Hong Kong dollars. We can move to the next slide. I listed over here success factors for U.S. company, but again, in truth, it's for any company on any exchange. I think the last 2 on this in particular, the forecasting and the willingness to embrace high government standards are probably the 2 most important. I recall going out to some meetings in San Francisco where I met maybe 6 or 7 hedge funds within 1 day. And on the flight home back to New York, the common thread between all those meetings is how upset they were about receiving guidance from companies on a Monday, and the real numbers come out on Friday and they didn't look anything like Monday. Very upsetting to them and doesn't enlist confidence. And again, corporate governance and transparency, these are going to be the corner blocks for the success of these companies going forward. So those, I think, are the 2 most important. Now, if you're a company in China and you're in a business that's unfamiliar to the US and in a micro niche, then you might not be able to do these things here and be able to sell. Next slide. Now that's a familiar face for most of you, I would imagine. The shorts have had their time in China. And I think the purpose of this slide is how important investor communication is, so that they understand what your business is, what your business strategies are. I remember working on a case about 3 years ago where a company was known for a particular program they produced. We pulled about 250 of what we thought were the educated investors, not necessarily the largest. And we found that we asked them if where did the revenue from this company is derived from? And probably almost 90% of them said this program, but in fact, it only accounted for about 4% of the revenue. So they really didn't understand how the company made money. So communicating to the investors of how you make money is key. And I've always said a short attack is like a heart attack. You don't have any knowledge of it coming. And the precautions and everything that you do from the onset usually dictates the rest of the outcome. So it's not something that you have a lot of time to respond to. Next. Excuse me. SPACs. We're going to talk a little bit about SPACs right now, and this is probably why later in the conference, I know there's a SPAC panel, I believe, and I'm going to kind of tell you why there is going to be a SPAC panel. If you look at this graph right now, it's quite evident. Years prior to 2020, SPACs are raising 3, 4, 5, 6 million a year. This year, they've only raised close to $60 million. The takeaways from this is that a lot of this money is available for companies, to be purchased in Asia. There's already been probably, I think, 4 SPACs that we've seen in Hong Kong right now. So this is a very interesting topic. Let's move on to the next. What is a SPAC? A SPAC, it started as what we used to call a blank check company. And it evolved into what we called a SPAC, which is a special purpose acquisition company. And they've grown in the United States, especially this year, phenomenally. We've had Bill Ackman from Pershing, Peter Thiel from PayPal, have all invested now in SPACs. Next slide. Key considerations for management in a SPAC. For me, a SPAC, it's sort of an enhanced RTO, particularly appealing to Chinese companies. One of the most appealing things about an RTO to the company was that 2 things. One, at the end of the process, you were guaranteed to be public. That was really key to them. And 2, you had the cost of it was not high. And 3, it was quick. Now, with a SPAC, one of the nice things about a SPAC is, one, you could do the SPAC transaction could be done in 3 months, as compared to an IPO that could take 6 to 9 months. The other nice convenient thing about a SPAC is that the pricing occurs right away. So you know what you're going to get for the company. You don't have to take the risk of going public. So there's some very appealing features to the SPAC, especially for Chinese companies. I listed out some of the things here that management really has to consider. And if you're going to do a deal with a SPAC, you really need people that understand that business. It's a very specialized business. These are very, very smart people. And one of the advantages also of the SPAC is that, your one transaction, you could be part of 3 or 4 or 5 transactions, so that you have a lot of weight within your company as far as growth is concerned. Okay, next slide. Negotiating a successful deal. SPACs usually have to close within 18 to 24 months. So if you're going to do a deal with a SPAC, you really need a crackerjack financial team. Because if you miss the window, the money actually gets returned to the investors, or they're going to replace your transaction. So it's very, very important that if you're going to be doing deals with SPACs, that you have a really, really good management team and people experienced with SPACs. A lot of the slides today that I have, if you email me, I can send you the PowerPoint today. So don't worry about some of the slides. Next slide. The SPAC closing process, I'm not going to spend much time on this, but I kind of put out a chart here from beginning to end for you. This details the whole process from beginning to the end of the process. So if you get a hold of the PowerPoint, this will kind of lay it out for you. Next slide. My summary, today, that, Chinese companies now have a lot of choices. Whereas years ago, they had only a few choices. And there's a strong appetite right now by the global investment community, for these innovative Chinese companies right now. COVID has closed down a lot of the economies in the world, and China has been doing exceptionally well right now. And that's good for growth companies. So there's an enormous appetite. But what I say, the tolerance for the lapses in corporate governance and for incorrect financials, the tolerance for this is going to be very, very low. So I think it's important for companies going forward, rather than to rush into transactions, to take the time and make sure that the companies are prepared to go public, because becoming public, it's not the end of the day, it's really the beginning of the day. So I want to thank you today for the opportunity to speak with you. If you do have questions, I don't know if we have a few minutes left. If not, you can email me the questions and I'll be happy to respond to everybody. Thank you so much. Have a wonderful day.